Hey, what's up everybody? It's Omar. It is Sunday, April 14th, 2019, 4:56 p.m. and I wanted to make a video talking about something I've been backtesting. I wanted to share with you guys. It's a strategy that I've been working on using Fibonacci for day trading. It's an interesting strategy. I found out about this maybe like a little over a year ago. I didn't really put a lot of thought or energy into it, but I thought over time that I'd start back testing it and see how it would work, and it's been very, very interesting. It's pretty remarkable, the accuracy that it works, and you can use it on any ticker. Like, it doesn't matter, small caps, large caps, it works on all caps, to be quite honest with you. Obviously, if you know nothing about Fibonacci, then my advice to you is there's a million videos on YouTube and Google it and learn. But basically, Fibonacci is just these levels based on math, and it's kind of like support and resistance levels based on math. There are three key levels: the 38, the 50, and the 61%, which is like the holy grail. But there are other levels as well. And basically, what you do is, and I have videos on how to do this, but basically you got to set up 3 different time frames. And what you do is, like, for example, you set up those 3 time frames the day, so like tomorrow's the market's open, so you would set it up using the 1 day 1 minute, the 10 day 10 minute, and the 1 year, and the way it works. And you can apply it to all time frames. So let's take a couple of tickers. Let's take a big ticker, for example, and then I'll show you some of the smaller tickers. So let's take like Facebook, for example. All right, so let me clear it out because I already had it set up. All right, so what you would do is so let me set it up. So I'm gonna pretend, because I can't use Friday in my variable, because we're gonna see what the results would have been on Friday had I set it up Thursday going into Friday, right? So the way it works is that you take the trend, the highest peak to the lowest peak, or the lowest peak to the highest peak, depending on the trend. So Thursday, so this is Friday, so you would have set this up on Thursday, right? Thursday after market close. So here was the high, which was 140. Let's see what it says. And let's do this. What is it? 148.05, and then the low would have been on the same day right here. This would have been the low. All right, which was 170. Let's see what it says. Yeah, 177. And then you can zoom in to just make sure you got the high and the low. So this says the high here is 178.53. This says 178.54. So I can right click on it and hit edit. And the way I set up the fibs is, you go down to this drawings, and you go to drawing tools, and you go to this option right here, Fibonacci Retracements. I already had it clicked. And then what you do is, you go down to the bottom and you make sure it's the right thing. So when I go on the bottom, and you have to capture this 177. It's super important that you have the correct levels, the correct numbers, for this to be as accurate as possible. All right, so that's the 1 day 1 minute, right? That I would have done Thursday going into Friday. Now let's do the 10 day 10 minute. Okay, so I'll go to time frame, I'll say 10 days, I'll say 10 minutes, and I'm using Thinkorswim as my charting. Okay, so here's 10 day 10 minute. So the trend goes from the lowest to the highest. We're not going to use Friday, we have to use the highest point before, because this hadn't happened, right? I'm just showing you how it works. So I'm going to map 166.69, and the highest point seems to be right here. Okay. All right, so this is the high, 166.69 to this 179.19. All right, so that's the 10 day 10 minute, and then we got to do the 1 year time frame. So when I do the 1 year time frame, I'm gonna do 218.62, because this is where the trend, the highest point of the trend to the lowest point, right? 123.02. So I'm gonna go down 123. Oops, yeah, it's a pain in the ass. There you go. All right, so we set our time frames, right? Remember, 1 day 1 minute, 10 day 10 minute, 1 year time frame, right? Okay, so now let's go and look at what happened Friday. If I would have mapped those levels, right, at the end of day Thursday going into Friday. Well, let's see what happens. Market opens, right? Look what happened in the opening candle. It said it opened at 178. It hit a low of 177.95 and then took off. Look at where the 61%, 61.8 percentile is. 177.95. Exactly where it bottomed. It touched that, and you could have took it long, risked off that. Now, I'll tell you this: I don't trade users. I just use simple support and resistance. But what I'm starting to do is put like a side chart and just have this here, and it helps with my confirmation sometimes, especially when I trade some of these bigger tickers. It's been kind of, it's been kind of helpful. So, and you can see, look, it spikes up, pulls back, and these are all the different levels based on all the different time frames. It pulls back, it kind of holds at 78, and then it's off and running. So it breaks this 161.8% Fibonacci, but then it starts its downward trend, right? And it couldn't hold, so you could have, covered in here and shorted. Now each fib level above is considered a potential resistance area, so you can take profit along the way. Like your next fib level could potentially be your price target. That's, you got to look at volume and price action and all that kind of stuff. But look at when it pulls back. So when it pulls back, it dips below the 100 percentile. Can't hold this 0%, and you can see it's acting like a level of resistance. And look, it literally touches it, and then look, it comes down and it bounces right off this 100%, 178.53. So let's see where that candle, the low of that candle, 178.51. This was 178.53, and then you got another push up. So it's pretty remarkable how it works. And 61.8 is like the key, like they consider the holy grail in fibs. All right, so that was Facebook. Let's look at, all right, and that was a big, that was a large ticker. So you could have short if it couldn't held here. You could have longed once you saw it found support, and there's a lot of support levels below, so that gives you kind of an idea that the trend is going up. All right, but let's look at, I'll show you something real interesting. Friday, the big mover was let's see, what was it? It was let me go here and let me scan. The big mover Friday, if I remember correctly, was where is it? Jesus, why can't I remember? Where is it? Oh no, it wasn't. It was RBZ. Check this out. You want to see something crazy? All right, so RBZ, right? So let's, just for the sake of this, let's pretend, right, you mapped this Thursday. Now, there's no way you would have been looking at this, because I mean, this thing, they had no reason to run. It probably had some news that happened that day. But let's assume that you followed the path. So you see it starting to move. So you're like, okay, let me map these levels, right? So remember, so we're gonna do the 5-day 1 minute. I'm just gonna do the 1 day 1 minute. So if I'm zooming here from the highest point to the lowest point, right? So on, this is what, the 11th. So the 11th, and you see that there's like literally no volume here, but was there? Yeah. So here was the high point right here on the 11th, which was 9:30, and the low was right here. Okay. All right. So that's, now let's do the 10-day 10 minute. All right, so the 10-day 10 minute would have been our, what's the highest point? So this would have been the highest point, right? Okay, and we would have mapped the lowest point, which would have been right here, 380. All right, and then we're gonna do the 1 year. So 39.68 is the high point. And I'll just fix it. I'll just click anything just to fix this. And then 660 is the low, right? So that's the trend. So 39.68, I gotta make sure I fix this to say 39.68. All right, so now let's pretend, right? So we map those lines and Friday happens. Look at where the stock literally bounces. 61%. Look at where it gets rejected. Right there. I mean, literally right there, right at the 61 percentile. So this thing ripped all the way to the 61 percentile. Then when it bounced back, right, look where it bounced off of. There's like two levels that are here. That's why you see it's overlapping, a 78, and I can't even tell what the other number is. But look where it bounces off. It found support right here, gaps up, kind of like couldn't hold this, consolidates, and then, you know, pulls back, and you know, but you know, and then it's kind of like all over. But you could short, like if you see it can't hold a level, you can go short. If you see the trend is starting to reverse and the volume is starting to fade, and you can risk off one of these levels. Look, it literally almost touched the 50 percentile, got rejected there. All right, the high here was 22.80, and this was 23.14. All right, and you can see it got here, and then it kind of like pulled back and fell, you know, came down. It's pretty remarkable that it literally touched 61.8. That's pretty crazy, you know, when you look at that. Let's look at other stocks. Let's do like AMD. Okay, so you know, you can go long and short. So let's say like you see when a stock has a big collapse, you're always gonna get a bounce. And if you notice that it bounced off here, and you know, I'm doing the 5-day 5-minute. Let's see, let's see, I'm doing the 2-minute. You know, and you're watching this. You know, here it's literally bouncing off right off there. You can go long. You know, like you can risk off it, and it literally touched the level, which is pretty remarkable. How it caught the top and the bottom. You know, it's pretty remarkable. I know a couple of people who, and you know, gapped up, and you can see the head and shoulders pattern forming, and it nearly touched that 50% retracement, came all the way back down and found the bottom right here at the 61. Look where it bounces, 61% in after hours. You know, it's remarkable. You can test it yourself. Let's do another ticker like AMD, and then I'll show you how you would map it for tomorrow, and then let's do one of the lower price stocks. Let's do like let's see what VTL. Let's see what VTL would have done. All right, let's do this. Now VTL would have been a little different, right? Let me show you why. Because it's not a perfect science, just so you know. All right, this is not perfect science. You know, it's the probability is high that it works, but it's not always accurate. All right, so let's assume, all right, you're looking at VTL. You know, it's been running, so you want to catch that 1 day 1 minute. So here's so the trend is from here, right? The trend is the low, which is, what's the low here? The low here is 60 cents. So here's the low. The high here is right here. Let's see. All right, there we go. And then the 10-day 10-minute. So I'm just doing 10 days, and you can make these your favorites. I'm just doing this like in real time. I didn't really prep for any of this. I'm just, you know, doing it in real time. All right, so the 10-day 10-minute. So 19 cents is that's where the trend started. That's the lowest point. So we'll go down to 19, and the high point is 129. Now in theory, let me stop. In theory, this would have been the high point. Now, let's say this is why in this situation you would have corrected the 10-day 10-minute, because let's say pre-market the next day you see this moving, you want to catch it, you want to catch that top pre-market. All right, because the trend is already above. Like technically this would have been the top. Let's just do this, but then I'll fix it. Let's say we would have caught this 10-day 10-minute here, and then we would have did the one, because in theory that would have been it. But when you have a situation like that where pre-market is like gapping crazy, you want to fix the 10-day 10-minute to equate that top. All right, and then the 1 year, you would only change the 1 year only if that was like breaking to a yearly high or something like that. And then, you know, you would do the right here, the 1 year, so 75, and then you would capture the low, which is 15 cents. Wow, it's crazy. All right, so this may not be as accurate because, you know, that trend kind of broke, but just so you get a sense. All right, you see how, you know, when you see a gap up and you see that pullback, you know, it found its way here. This is kind of where it consolidated. If you look, you know, gapped up, it kind of held here, and this is where you could have, you know, took it long, seeing that the trend was reversing. But then, you know, it pulls back, and you know, it finds its support like right around here, this 38.61 level, and that was post market. Now, if you would have fixed that 10-day 10-minute, and let me see if I can find the 10-day 10-minute right here. So let's say I would have fixed that and made it, and then tracked it, you know, pre-market, to say, oh, this thing is moving pre-market, so let me at least do the 10-day 10-minute to coincide with that pre-market move, right? So here's the 10-day 10-minute. Now look at, and this is why in a situation like this where the stock is, you know, zipping past where it's been, you would actually move that 10-day 10-minute to coincide with whatever the top is pre-market, and look what happens. When you if you put that 10-day 10-minute, look at where it bounces. Boom, right here. So you see it pulls back right here. Literally, it got a little bit below. The low here was 87. Yeah, no, caught it right here, exactly at 87 cents. It retraced to 32 percentile, and then you could have took it long. And then, you know, this is where the bag holders are holding, and you can see it had doubled that resistance here, and you could have went short. And then, you know, look where it happens. It literally bounces right off it again. Gets low, bounces and gets rejected, so you could have shorted here. Look, bounces off it again, pulls down. This is the previous day's close price, this yellow price, and you know, it keeps just trending downward. And then, you know, right around that 61 percentile, you know, it's kind of reversing, and then you could take it long post market, which I don't recommend. But it's pretty incredible, man, how this thing works. Let's do another ticker. Let's do one more, AMD. And then you could do, you know, you could use this with the big tickers, with the I mean, I already had set this up, but I'll do it again just to show you. So at AMD again, you know, you do the 1-day 1 minute, but I'm gonna go back because remember, I'm pretending like I'm doing this as if it was Thursday, preparing for Friday, right? So on Thursday, the low would have been here, which is 27.46, and the high would have been here, somewhere right around here. All right. So that's the 1-day 1 minute, and then you do the 10-day 10 minute. So here's the 10-day 10 minute, and the low is 25.80. Gosh darn it! Sorry guys, I'll fix it. And then 29.95. It's a pain in the ass. 25.80. So at 25.79, it's important to map those lines to the exact number. All right, it impacts the accuracy. Oops, sorry. It impacts the accuracy, so you want to be careful. So 1 day 1 year. All right, so and then 34.14, and there you go. All right, so let's see what would have happened based on the levels that you had mapped this Thursday. All right, and look what happens Friday. Look what would have happened Friday had you done that. Market opens in the first 2 minutes. The stock opens at 28.21. It spikes to 23.38. Look at where the 38. Look at the overhead resistance. You have these 2 levels over here, resistance. So there's a lot of resistance here. And right into this, you could have shorted, risking right off this high, because you saw it rejected, and this thing tanked. Look where it came down to. Look where it bounces off of, that 38 percentile. Okay, gaps up. All right, you know, then, you know, pulls back, bounces off the 50, and you see it's trending downward. But it downward trended all the way down. You can see it gets rejected on each pop. It gets rejected on each level. But look where it reached, that holy grail, that 61%. Look, it got below it, you know, a little bit below it. This is 27.69. It got to a low of 27.66, only by 3 cents, man. And you could have bought the dip here, up and running. And, you know, you price target, you could use these levels as potential price targets, but you can, you know, track to see, you know, VWAP. It came all the way up. I literally tested VWAP, and then look, bounced off, pulled back, held 38, and then it was in this channel, and then it pulled back to the previous day's close price. So, you know, it's not a perfect science, and this video is for people who really are, you know, people who use Fibonacci currently. This is more for them. I'm just showing you that this is a strategy that does work. I know people who just live off these levels. They don't map support and resistance like I generally do. They just map these levels on the chart using exactly what I do, and they make trades based off this, and they make a shit ton of money doing it. Don't listen to like any guru telling you that their way is the only way, because I know the most profitable trader I know, he's a swing trader, does pinch plays. He doesn't hold positions generally more than 3 days, and he uses like several indicators, and he makes more money than anybody I know trading. He makes a shit ton, you know. Let me show you one more. Let's look at PHAS. All right, this is one of those other stocks that I had mapped this earlier. All right, so I'm just gonna pull up the chart because you know, you guys get the gist of how you do it now, right? Because I showed you 1 day 1 minute, 10 day 10 minute, and and 1 year, right? So look what happens here with PHAS. This was one of those running, and market opens. Here's the 38 and 50 percentile here, and the previous day's close price all acting as resistance. It doesn't even get there, but look, it kind of pulls back, and it literally gets to that 61 percentile, which was 1257. It hit a low of 1263, reverses, and then it's off and running, you know, and you can see it, you know, gaps up, dips below, consolidates, you know, kind of holds these levels. Look, you can see literally bouncing off these levels, couldn't hold, and then got rejected. Look where it bounced off, literally right at this level. I mean, it's remarkable how accurate these things are, you know. And with volume and everything, you can manage the trend and see where it goes. It's pretty remarkable, guys. I mean, you know, like I said, now I'm starting to put like this on a separate chart just to see if it like coincides. Generally, you know, I just play support and resistance, and you know, I see a key support level and I see it holding, and I'll buy a dip that way. I don't make it too complicated, but this is interesting, and you can look at, you know, do this too for Google, do this for Apple, any price stock, low price, high price, it works. It's pretty remarkable. So let's say like tomorrow you're making your watch list for tomorrow. All right, so I'm gonna clear this out. So if you're gonna make your watch list tomorrow, the only difference between what I've been showing you and what you would do for tomorrow is, for example, let's say I'm gonna use AMD. I look at AMDs literally almost on my watch list every day. Let me just clear everything. Oops. So I'm gonna clear it all. All right, so let's say now the only difference between what I've been doing is this, is now that I'm doing the 1 day 1 minute, I'm using Friday as my, you know, so Friday the high was 28.38, and use pre-market matters, guys. Even if it's one share that was showed in pre-market, that was high, you still use that. That's how it works. So whatever the high is and whatever the low is, you do. So here's the high and the low. So right, 27.66, and then I'm gonna do the 10 day 10 minutes. So each day, guys, you have to update this. So each day, at the end of each market day, you got to update this. Now, if if you're good with coding, you can create a fib that has a code that does it for you, a script that does it for you. All right. So so then to the 10 day 10 minute, it would stay. This doesn't change, but I'm still making sure that it coincides. And then the 1 year really wouldn't change. It's just the 1 day 1 minute in this situation where you would have to update. But here it goes, 10 day 10 minute, and then the 1 year. And then I would map this. So 956. Remember, guys, it has to be exact. All right, and then 34.14. There you go. So all three are mapped. So for tomorrow, I'm already set with this stop. We'll see what happens. Map it and see how it works. And then if you like trading these low price stocks, map them for Monday. So map like VTL was a big mover. It came down, it kind of tanked, but you can map VTL. Look at some of these low price stocks like TRNX and KTOV. If you want to map them, see how my lines are. That's it. I just map lines. I don't really use that. But now I'm starting to what I'll do is I'll have a separate chart like this where it'll be completely separated from my actual chart, and I'll have my lines I'll have those fibs mapped just to see where 61 percentile is, and if it coincides with an area of support that I map on my lines, that's a key barometer. I'm gonna buy that dip. Or if there's a lot of overhead resistance on the fibs, which coincides with the area of resistance on my lines, then that's a potential big short for me. So I just wanted to show you how that works. I didn't want to make this too long, but now you have an idea. If you have any questions, just reach out to me on Twitter, watchotrade, or even better on my YouTube, watchotrade. I'll be posting this in a moment, and hope you found this helpful. So study up, and so you can learn more about fibs. I have another whole video about fibs, but this is much better now. All right, so have a great evening. And guys, don't ask me about this indicator. I can't share it, so don't even ask me. All right, so have a good evening. Bye.